Okay, let's do the closing entries. And that's closing entries are really quite straightforward, but let me give you a quick overview on what we're doing. So if we go to the trial balance, and some things I've said before about the accounting equation is, and accounting in general is quite elegant. So an important thing we need to distinguish between is permanent accounts, and they are all of the accounts from here up. They're all permanent accounts. I'll just colour them for the moment. And temporary accounts, and they're all the accounts from here down. So in the accounting equation we have assets equals liabilities plus owner's equity. And owner's equity at the end of the year, that's in the capital account. But we have transactions all throughout the year, and we don't update the capital account after every single transaction. What happens to those? Well, they go into the temporary accounts. And at the end of the year, we empty all the temporary accounts out into the capital account. And that's what we're doing now. We've got to the end of the year, and we're going to empty all our revenue accounts into, well, firstly the income summary, and then into the capital account. Then we'll empty our expenses into the income summary, then the capital accounts, and finally we'll empty drawings into income summary and the capital accounts. So these will be, we'll do this in journals in the general journal. So we start off with, so in order to empty out a revenue, let's have a look at the revenue, is sales, and we know that sales is typically a debit. So sales is typically a credit, so to empty it we need to make it a debit. So we go to the trial balance, and trial balance, and we know that our sales are going to be a debit of 913,250. We also have some contra accounts to sales, so we'll do all the contra accounts with the sales. So the contra accounts are sales returns and allowances, bad debts, and discount allowed, which is the same as the discount we give. Now what are these amounts? As I said, this is a pretty straightforward process. So we see 21,000, a bit over 5,000, a bit over 3,000. So these items, their normal balance is a credit, so to empty them out. So their normal balance is a debit, so to empty them out, we make them a credit. So again, we see normal balance is a debit. If we want to make these zero, we empty them out, means we've got to put a debit in there. Sorry, okay, take that back again. The normal balance is a debit. To empty them out, we've got to put a credit in there so that it becomes empty. Right, then there's a balancing account, and that's the income summary. So it'd be helpful if you looked at the podcast we have on closing the accounts. Income summary. So the income summary is the balancing amount, so we go sum of this. Actually, we need to do it the other way. We need to do equals this amount minus the sum of these, so that our account balances. So we have all of these now written. In terms of the journal, this will be, reference will be G11, and it is closing revenue and revenue contrasts. Righto, next item, so this will be the 30th of June, 30 June, same 30 June, 30 June. Now this first item here is going to be the income summary. So we're now going to empty out all the expenses. Normal balance of an expense is a debit, so to empty it out we need to have a credit. income summary. Now, we don't know the value of this item first, we just know it's going to be first. So we need to go to the trial balance, and our first expenses, cost of goods sold. We can fill this down all the way. As I said, this is a pretty straightforward process. Then cost of goods sold, the dollar amounts. So the income summary will be the total of all of those. And our comment is closing expense items. This will be G12. We still need to post these to the general ledger. So we haven't posted them yet. We can tell by that there. We've just written the journals. The next journal, it's reasonably straightforward again, 30th of June. Now, what we're doing, we've transferred the items into the income summary, and now we need to transfer the difference into the capital account. So we can see here, the income summary, we can see here the total of the income summary debits is 850,000, total of income summary credits is 884,000. So the credits are a bit bigger, so we're going to have to empty out the credits, so that will be a debit in the income summary here. So income summary, so this amount will be what's equivalent to our profit, equals $32,372, and we know that will be our profit. Now, where does this go to? This now goes to the capital accounts. We have two owners. The amounts are going to be equal, so divided equally. And what are these accounts? Well, that is, well, let's go. A Noble Capital and B Noble Capital. But I just, oops. So that just highlights that we took all of the, and you'll see we've got one more to go. We've taken all of these temporary accounts down here and ultimately transferred them into the permanent account of the capital. So this is sharing profit equally between owners, and that is G13. Now the final one we've got to do is to put the drawings in. So here they'll go into the capital accounts again. So this time though there'll be debits to the capital accounts, and there'll be debits to the capital accounts because we're going to reduce the value of the capital, and we'll reduce the value of the capital by the drawings. So we take, so normal balance of a drawing is a debit. To reduce the balance will be a credit. Equals. And this will be G14, our last journal of the practice set, and it's transferring drawings to owners' capital accounts. Now we have one more thing to do, and we've got to do it a lot of times though, and that's in fact post the journal entries. So let's see what we do for sales. So we go to the general ledger, down to sales. Now our transactions are going to occur down towards the bottom. So well, our postings are going to occur down towards the bottom of the general ledger because they're all the temporary accounts. Righto, sales. So we know June 30. This will be closing. And again, this is a time it would be quicker really just to write these items in. G11. And it's going to be a debit of $913,250, and that comes out at 0, and that is a good thing because it's empty. We can see we've done it. Now we just need to go back the other way and indicate that we've posted it. And sales, general ledger is 400. Now we just need to continue on with these processes until they're all done. I'll do one more, but then I think it's reasonably straightforward from here. Income summary. Equals, well, I shouldn't do it until I post it really. Let me do it properly. Income summary. And the income summary only has a very limited amount of transactions. Oops, I've gone down when I should have gone up. Income summary, we'll never have an opening balance. Anyway, looks like I've left a space for it. June 30. Closing entries, doesn't really need an explanation because that's all that happens for it. So credit 884061. The reference is G11. Now let me go back the other way. This is posted to $350. I'll quickly also do the income summary for the expenses. Righto. General ledger, because I'm in there, income summary equals and we know June 30, it's closing entries, and we know it is in fact G12. So, and that gives us our profit, which we're going to post a little later. So, $350. Now, you need to go through and do all of those to empty them out, but I'll now go and post the income summary to the capital. So we go income summary to capital, so June 30, closing entries, G13, so we can see we've posted the income summary items, and the income summary will now have zero balance. But all of the temporary accounts need to finish up with a zero balance. So we've done the top two. Both got a zero balance, actually, and we've also done the contra accounts to sales, so zero balance, bad debt expense. I haven't posted it. Right. So again, that'll be probably the next one you do. Go back and post that one. That is the finish of closing entries. There is other videos on closing entries to give you a bit more of a background on them.